Today on the Facts of Life Insurance, we discuss internal 1035 exchanges.
Most brokers don't even know or are not aware that you can do a 1035 exchange for the benefit of having an enhancement of your insurance portfolio. Here's an example. Right now we're working with a guy who has about $150,000 of cash value in his policy. He's got about a $50,000 surrender charge on there, and his policy is no longer the best thing for him. The $50,000 surrender charge is a pretty painful hit when you're looking at the prospect of trying to move that policy over to a new one and only collecting the $100,000 amount that's available. So what we discovered on this one is that the current company has a more suitable policy for him that we can exchange for the old one and collect the entire $150,000 as an internal 1035 exchange. Now, this gentleman has to requalify for the insurance just like he was buying a brand new policy. Not all insurance companies will allow an exchange of this type to be commissionable. And this is for you agents out there. So that makes it a little bit difficult. We all want to get paid for our work, and I understand that we, in an internal 1035 exchange, probably shouldn't be entitled to getting paid on the exchange itself, on the what's called excess premium. The excess premium commission is typically about 2%. So I'm not expecting that we would get that because the money is already at the insurance company, and we wouldn't even want to get paid on that. It wouldn't seem fair. It's worth checking with the insurance company to make sure that it's also worth it for the agent to pursue this. Now, it's always worth doing the best thing for your client, but just for full disclosure, this may not always be commissionable, at least for the amount that you would be used to. A lot of times folks have found us after exhausting their efforts with other folks. A lot of times folks will, and I understand this, it would be my first instinct as well, just to call the insurance company and say, hey, the policy that I have now I don't think works anymore, and it seems too expensive, or I feel like I can do better for death benefit, or better on cash value, or whatever the purpose is that you're seeking at the time. And you ask the insurance company for advice. Well, I can tell you what their advice is going to be. Their advice is going to be every single time that the policy you have now is performing well and you should keep it, or you should buy more. If you ask your captive agent, who is basically an employee of the insurance company, what you should do now that you've discovered that your needs have changed, he's not going to say that you should replace your old policy for something better. He's going to say that it's performing well and you should hang on to it. There's reasons for that. The longer you hang on to that policy, until death, of course, the more profitable it is for the insurance company. The longer you hang on to your policy, the better what's called the persistency will be for that captive agent. This information is not going to come from the insurance company. It's not going to come from a captive agent either, and it will not come from most brokers, only because they don't really know about it, or they realize that the commission would be reduced in the event of an internal 1035 exchange. The question really should be, is this policy completing the objective I need it to complete the most efficient way possible? You need to look at your policies, or your one policy, or your portfolio of insurance, and for your whole family, or if it's a trust or what have you, and review them to make sure that they're still good, or they're still the best. They may be good in a sense. Maybe they're in the top 80% of all insurance policies that it's possible to have, but is it in the 99th percentile? Probably not. So there can be some incredible improvements that can be made at the insurance company you're with.